The BNB welcomes you back to another video of cryptocurrency. Today we'll be discussing a very relevant factor in the crypto market, and it is stablecoins, mostly USDT Tether, the biggest stablecoin in the crypto markets right now. It has a market cap of $64 billion. First of all, I need to explain to you what a stablecoin is. It is a coin pegged to a stable asset. Most of the time, it is the US dollar. And the US dollar, in USDT's case, it is also the US dollar. So first of all, we need to know the use case for these USDT, these stable coins. So it is a median between your bank account and your crypto assets. So people, if they don't want to transfer back, if they don't want to do transfer back and forth between their crypto brokers and their bank account, that allows you to have a stable asset within your crypto broker and not to do these back and forth. And it is very helpful in my opinion, but unfortunately, like when you think on the surface level, it might seem like an easy investment, an easy concept to grasp, but unfortunately there's a lot of risk associated with that, and these risks I will tell you guys today in this video. Also, if something happens to that Tether, especially Tether, if something happens to stablecoin in general, but Tether, because it is the biggest one, it's the third biggest cryptocurrency after Ethereum, market cap of 64 billion. If something happens to that, unfortunately, your crypto portfolio will feel the pain, and that is why you need to watch this video and understand the risk associated with that. And if you are comfortable investing in crypto after knowing all these issues. So how I would explain stablecoin seems like an easy concept to grasp, but unfortunately, it is not that simple, and there's a lot of risk associated to that, like I've said many times in this video. Unfortunately, when you give the power of printing money on the blockchain, it is a risky way of doing business, and it might conclude to some shady actions, because unfortunately, if you give the power of printing money to anyone that is not a federal entity or a government, unfortunately it will make some shady activity that could happen, and they could print more token without having the money in the reserves. Like I said, the way the USDT and all these stable coins work, they take your dollar, they put it in their reserve, they make the token. But if, for example, they make more token and they have less money in the reserves, and somehow they get audited by any federal entity, they will find out that they don't have the asset they are claiming to have in the reserve. Unfortunately, that will make your coin go down in value. So they have to have the same amount of money in the reserve than the amount of token flowing. We can just, like, as a crypto investor, the information that is given to us is only the amount of coin on the blockchain and not the amount of money in the reserves. Ever since this Tether was created, they've been only audited once, and it wasn't even an audit. It was a bank account, a photo of a bank account statement where they showed how much cash they had. So something that, and also the founders of the Tether have shady past. They've been many times associated with lies. They've fed lies to their Tether investors. It's not an investment, but somehow the holders of the Tether coin were lied to many times by the Tether founders, and also they in their past life have been associated with scams. That is very risky for me, in my opinion. That seems like to me that Tether might have some shady activity within its network going on, which we are unknown of, because crypto is somewhat not for regulated at this moment. So people can do whatever they want. So many pump and dump scams are happening right now, and nothing the SEC is doing. Nobody is actually going to find these people because it's not regulated. You can do whatever you want. If you do a pump and dump on the stock market, you'll be jailed. That's what happened with the Wall Street, the Wolf of Wall Street. If you saw the movie, that's what happens if you do those kinds of activity in the stock market. But unfortunately, if you do them in the crypto market, that's now you won't be faced with any charges. And also, we know that Tether, where they make their coins and all their operation is happening offshore. So for US lawmakers and the SEC, it's not going to be that easy to charge them due to them being outside of US. So it's not going to be that easy for anyone to put blame on them, give them charges if something happens. I'm not saying something will happen, but I'm just stating my opinion that these are the risks you are taking. So for example, I'll just give you an example of, for example, there's 100 coin on the markets right now, 100 stable coin. We'll name those coins P. Okay, there's 100 P on the market, and the amounts of, if the reserves has to be equal to $100, $200 US dollars for 1 P to be worth $1. If, for example, the founders or the user, the maker of P, spends $50 in the reserve, and then there's still 100 coin on, nothing has been burned, there's still 100 coins circulating in the market, unfortunately that will mean that your coin will automatically and fundamentally be worth 50 cents and not $1. So you lose 50% of your value just because the founder used your money. Nothing to do with you or nothing to do with the buy and sell market or anything. You just lose your money just because the founder decided to use your money, and that is a risk you're taking. Also, the shady past that I've mentioned of the Tether users and scam and everything, if you want to know more about it, go watch CoffeeZilla's video. He explains in detail all the risk associated with Tether and the founders and what Tether has been implicated within the years of its existence. It's very, very risky in my opinion, and I would like you to watch that video because it will give you a lot of knowledge of how Tether and the founders were really, really doing mischievous activities. So all stablecoins are at risk, and this is the risk that I was telling you about. The coin maker being very shady, and it's something that has been happening happened many times in the crypto markets, and we keep seeing it happen. The pump and dumps, the DeFi 100s, people lying, people giving up on projects, just promising and then leaving, making so much money. Pump coin going to the moon, scam coin going to the moon, and we're seeing this kind of activity, and that unfortunately hasn't happened. Fortunately, hasn't happened to any stable coins for the moment. But the more time progresses, the more they can be found out, because for a scam on this big level to be found out, it takes a lot of investigation from the FBI and everybody, the SEC. And if, for example, one day they found out that these kinds of things have been happening, they will close down Tether, and all the Tethers, in my opinion, might not be gone from these exchanges, but unfortunately their value might go to zero very, very fast, because there will be no money in the reserve, because the SEC will confiscate that money. And also, when you look at how the Tether has allocated its supposed money in the reserve, you can see that only you can see on CoffeeZilla's videos, and I'm taking this screenshot from CoffeeZilla's video. Thank you, CoffeeZilla, if you're watching this video. They have 3.6% of their cash in liquid cash. So all the others are treasury bills. Treasury bills, in my opinion, are very safe, so I don't see an issue with that. The issue I see is their loan. They've loaned out a lot of money, and 75% of the money has been loaned out. Is that a good thing? I don't believe that's a really good thing, because 2008, you know how the subprime loan mortgage, the financial crash in 2008 happened, is people defaulting on their real estate loans. That can happen here. People can default on their loan that they've given out to people. You can see that unfortunately can be very detrimental for the Tether itself, because if people don't pay their loan with the interest, Tether will lose its money in the reserve, because it's not actually in the reserves and in people's hand, and people can just declare bankruptcy and just say, hey, I don't have the money, what are you going to do about it? And unfortunately, the Tether creator won't be able to do anything about it, and that the money in the reserve will be diminishing, and that's a really unfortunate situation that could happen. That's what happened in the 2008 crash. And if banks can face that situation, like Tether creators, they're not banks, they're not regulated, they don't have anything on them, so they can easily face this problem without any issue. Also, there's a lot of you can see that 24.2% is fiduciary deposits. So I've checked out what fiduciary means. I had no idea what that meant. It means that they have that 24% of the money is in friends or relatives of somebody's accounts. I would say I would believe in their founder's account. Does that make sense? Does not make sense in my opinion. Why the hell is it in these kinds of deposits? Fiduciary deposit doesn't make sense. It should be in the company's reserves, and that's that kind of thing you only see in the crypto market. You will see nowhere else a company keeping money in their own accounts or own deposits. It's really, in my opinion, very strange. So I don't want to discuss about that anymore. I just want to lay out the risks in front of you. If you believe this is fun, then please leave it in the comment. And if you got value from this video and were able to understand more about the stablecoin and the risk associated with them, I'm really happy. That was my goal. So subscribe if you want. If you don't want, just play Pokemon, because that's the advice I always give out to anybody that is not investing money. Play Pokemon. Pokemon is a good way to invest your money.